Hello everyone, and a warm welcome to the fourth session of our 22nd annual Marine Money Greek virtual conference. Just to say one more time, it is a great pity that we're not all meeting in the Hilton Hotel in Greece, but nonetheless, we're very happy with the connectivity that we have and that so many of you are joining us today from Greece and of course from all around the world. This session is called Planning New Investments for an Unsettled Future. Our moderator is Dr. Hauke Kite-Powell, who's Senior Analyst at Liquid Gas Shipping at Marsoft. And Hauke is also going to give us a presentation in order to kick off the subject. So Hauke, over to you for the presentation, please.
Thank you, Kevin. Good morning, everyone from Boston. It's my pleasure to be here, and I want to thank the organizers of the event for having Marsoft back at Marine Money Athens. We hope to be there in person again next year. But for now, we'll make the best of it with a virtual meeting. And I would like to start off this session by touching on two topics. The LNG tanker market first, and then the topic of decarbonization in the shipping industry. Next slide, please. I'm going to introduce each of the topics just briefly and then go into a little bit more detail. So in the LNG tanker market, it's been a challenging year, but we believe that the fundamentals for that segment of the shipping industry are solid. And this is driven by a number of factors, including the demand for gas remaining robust and growing for several decades yet, certainly for the time horizon relevant to planning new investments in LNG shipping. That's driven by air quality considerations, greenhouse gas emissions, and decarbonization in the power industry, and the economics of natural gas as a resource. And while we have a lot of talk about peak oil, perhaps having happened already or coming in the next few years, the general view, and we share this, is that peak natural gas is not coming for a couple of decades yet. The global demand for gas is growing at between 1% and 2% per year and is likely to do so for a couple of decades. Demand for LNG is rising much faster than that. And so the prospects, fundamental prospects for the LNG tanker market are sound. And that will only get stronger, I believe, with improvements in carbon capture technology for power plants that will make natural gas even more attractive as a fuel for electricity generation. Next slide, please. When it comes to the shipping industry broadly and decarbonization, the picture is a lot more unsettled and uncertain. And one of the drivers here to be mindful of is that there's a growing movement to be explicit about climate risk and environmental sustainability ratings in the financial world. And in the business of creating these kind of risk indices and ESG ratings, maritime transportation routinely shows, as in this graphic here, a very high climate risk component. And that is related to climate risk here. It refers to risk exposure both to climate change events and for the shipping industry, maybe more significantly, policy changes related to climate change considerations. So we'll talk about that a little more in the second half of my remarks and the role that retrofits of older ships can play in managing and reducing that kind of risk. But let me start with the LNG tanker market first. So next slide, please. The year has been a difficult one for LNG trade because of COVID. No surprises. This started out looking very good in late 2019 and early 2020. The LNG tanker market was strong. We'd come off a year of very strong trade growth in LNG, about 12 to 13% in 2019. For 2020 now, with the COVID effects and the contraction in trade and gas demand, we expect to finish the year with somewhere between 3 and 4% decline in LNG trade volume versus last year. That's not as dramatic as in other segments like oil, but it's still a substantial hit to trade and ton-mile demand. You can see in the lower left here the picture of US exports. This contraction in trade has hit US exports particularly hard, and the EIA doesn't expect them to return to the record volumes that we saw last winter until late in 2021. We had expected to see a stronger recovery this fall. It's been hampered by, among other things, weather events in the US Gulf of Mexico that have kept export facilities shut in for considerable periods of time. Still, looking forward past 2021, we expect to see the LNG trades back on a 5 to 6% per year growth path. Our base case used to look like the high case in this picture. It has been set back by this COVID contraction, but still that's a sound fundamental growth outlook for the base case trades. Next slide, please. This strong LNG trade outlook is supported in part by the economics of natural gas as a fuel for electricity generation. Natural gas is not cheap just in the United States at this point. LNG prices have been below coal prices in Europe and in Asia as well. And while those prices are likely to rise over the course of the coming winter, the general picture, we believe, is that gas remains strongly competitive with coal, especially when you factor in carbon pricing. And this is part of what supports the optimistic forecast of trade demand in LNG. Next slide, please. We have had muted ordering in LNG this year. I think our ordering projections are likely to be revised down again with our upcoming forecasts. And while we've had some fleet growth this year and stronger fleet growth coming next year in LNG tankers, 2022 and 2023 look like they will be slower. And that helps support a rising picture for charter rates in those years. Next slide, please. So this is a snapshot of our TC rate projection. In this case, the one-year TC rate for a dual-fueled or tri-fuel diesel electric 170,000 cubic meter benchmark ship. We expect stronger rates this winter, then still a somewhat challenged 2021, mainly because of the fleet growth, and then improving rates in 22 and 23. That base case forecast is predicated on a gradual easing of the COVID problem over the coming 12 months around the world. And it assumes that trades between North America, for example, and China and other regions in Asia remain on track. We could see a low case in which rates are significantly weaker if the COVID problem is not brought under control this winter. We could also see a high case, a return to the pre-COVID trade levels if more rapid progress is made there, and if relations remain positive between the US and China. there's a fair bit of uncertainty about that. But our base case projection is for stable rates gradually rising over the next several years in the LNG tanker market. We should note also that the rates for more modern ships are higher than what's shown here, likely by $10,000 or $15,000 per day. And the rates for older ships, steam ships, smaller ships, are lower by an equal amount. And we'll come back to that question in the discussions. So let me switch gears then and talk about decarbonization in shipping. The next slide, please. And here, there's a fair amount of uncertainty, as I'm sure you all know, about what the goalposts are and the timetables. There are goals that have been articulated by the IMO. There's talk of potentially more aggressive goals, particularly within the European Union. The shipping industry has already come quite a ways toward some of those goals, reduced CO2 emissions in particular by adopting slow steaming over the last 10 years, and with a new generation since 2015 or so of ships that are more fuel efficient. And the CO2 emission goals articulated by the IMO, we believe, are largely achievable over the coming decades with the technology that we know and employ today. But the more aggressive targets, including getting maritime shipping to a net zero greenhouse gas emissions, are not technically feasible with technology that is deployed today. And so there's a wide range of possibilities being considered and a lot of research and development that has to take place before the question of how we can get to net zero is definitively answered. That, of course, leaves ship owners with a lot of questions about which way to direct their investments. And the point that I want to make here is that as we wait for new technologies to shake out, there is potential for substantial reductions in CO2 emissions from the fleet, from the existing fleet, if we focus on retrofitting some of the older ships. And by vintage ships here, I mean generally ships that are around 10 or perhaps 15 years old, so the pre-eco ships. Many of those ships, most of them, were designed for a different operating environment with higher speeds in general and less concern for carbon emissions. So today they're operating in a different environment, and they can be adapted to that environment with retrofits. Next slide, please. Let me illustrate that point by looking at fuel consumption numbers for a couple of benchmark ships, in this case, a VLCC and a smaller tanker. The blue bars in this graph show a typical main engine fuel consumption for those ships in tons per day, averaged across loaded and ballast conditions. For a vintage ship, a typical older ship in each category. The green bars show the equivalent eco ship. And you can see that the eco ship has generally about a 15% or so lower main engine fuel consumption for an equivalent cargo capacity compared to the vintage ship. And that higher efficiency is reflected in the rates and prices for those eco ships, which we typically see at Marsoft being in the range of 6 to 12% or more higher for the eco ships than the vintage ships. Next slide, please. So at Marsoft, we've worked over the last 12 months with a team, including researchers at MIT, to develop a model that lets us analyze the fuel consumption profile of a particular ship and investigate the potential for reducing fuel consumption with retrofits. Could you back up one slide, please? So what we show here in between the vintage and eco bars is the fuel consumption for a vintage ship that has received retrofits to improve its fuel efficiency. And you can see that for the VLCC, retrofits are able to get us most of the way toward the eco performance. With the smaller tanker, it's not quite as close, but still a substantial improvement. And those retrofits in this case include things like tuning the engine for lower power output, adding ducts or stators to the ship to improve the water flow through the propeller, perhaps swapping out the propeller with one that's optimized for lower speed, and in some cases modifying the bulbous bow to optimize for lower speed. Those retrofits can, as you can see here, move a vintage ship substantially toward the eco in terms of fuel consumption performance and, by extension, lower carbon emissions. Next slide, please. The potential for reducing carbon emissions from the fleet as a whole by means of retrofits like this is significant. We estimate that if retrofits were applied to the vintage fleets across the board, that would reduce the carbon output from the global fleet by something like 30 million tons per year. That's about 5% of the total emissions from the shipping fleet. And these kind of retrofits can be adopted by these ships in the course of their normal 5-year survey work. So it doesn't impose substantial additional dry docking costs and doesn't take the ships out of commission for an extended period of time. So why is this not happening on a large scale today? Well, even though the potential CO2 emission savings are substantial, if you look at the financial return from the investments in these retrofits, and that investment is typically somewhere between $1 and $2 million per ship, depending on the size and the specific retrofits that are selected, the savings in fuel costs alone to the owner or the charterer from those retrofits, in most cases, don't justify the investment. The exception is certain ships that have particularly high fuel consumption, VLCCs, large container ships, and so on. So in about 5% of the ships in the vintage fleet overall, the fuel cost savings justify the investment in the retrofits. For most of them, it's too costly at present, too risky, and the payback periods are too long. Next slide, please. So what we at Marsoft would like to do is find a way to change the economics of retrofits to make them attractive to owners and to charterers and to marine financing. And we're doing this by focusing on 3 areas. The first is reducing the capital costs of the retrofits themselves in 2 ways. One is by scale in retrofits. The capital costs can be reduced of things like stators and ducts and so on if the number of retrofits is substantially raised from where it is today. We can also achieve cost reduction by increasing the debt capacity of the ships. If a retrofit ship is recognized as having a higher value, closer to that of an eco ship, that increases the capacity to provide low-cost financing for retrofits. A second area we're focusing on is the reduction in uncertainty or risk around the performance of retrofits that might be implemented. And we're doing this by providing for owners a low-cost, very efficient way of screening their ships, particular ships, for retrofit options, and identifying very quickly which retrofit options, which combination of retrofit options would result in what sort of fuel consumption and emission reduction. And by working with vendors of retrofit options to provide clear ways to monitor and guarantee the performance of those retrofits. And the third area in which we're working is enhancing the revenue to owners from retrofit investments. There are markets for CO2 reduction credits that can be entrained in this work, and that can provide direct additional revenue to owners who invest in retrofits, particularly those that on their own fuel consumption merits may not warrant the investment, but where if you include the value of the reduction in greenhouse gas emissions, that additional carbon credit revenue can be part of the equation and can enhance the financial return from the retrofit investment. And we believe that by utilizing each of these factors in combination, we will be able to reduce the effective cost of retrofits by 30% or more. And that, we believe, is enough to turn the tide on this and to lead to large-scale adoption of retrofits, enhancing the value of owners' fleets and reducing the climate footprint of the shipping industry. Next slide, please. So the Marsoft CleanCo venture that is working on this welcomes your inquiries and participation in this work. The contact address is shown here. We believe that this approach to thinking about decarbonizing the vintage fleet has a number of advantages. It allows owners to perhaps delay investment in new ships while they wait for technology to settle out, while at the same time lowering the fuel consumption, increasing the value, and lowering the carbon footprint of their existing fleet. And for banks, we think that the adoption of retrofits at a large scale is an attractive proposition in which they can support the financing for this kind of large-scale retrofitting and reduce the climate exposure of their vintage ship loan portfolios. That's the end of my prepared remarks. If we go to the final slide, please. I think we can begin the panel conversation at this point.
Okay, thank you very much, Hauke. A couple of, I'd like to now invite George Saroglou, who's COO of 10 Limited, and Jerry Kalogiratos, CEO of Capital Product Partners, to join the discussion with their cameras and with their audio. Perfect. And just a couple of ground rules before we continue. If any of you listening would like to ask a question, you can do so by writing the question in the box, which is down at the bottom right-hand side of your screen. I will receive those questions, and at the end of the session, we'll spend 5 or 10 minutes asking some of those questions. And back to Hauke for the discussion. Hauke, please.
Thank you, Kevin, and Thank you very much, George and Jerry, for agreeing to join this panel conversation. If I might, I'd like to start with a question, and each of these is directed at both of you, but perhaps I can ask Jerry to lead off with the first one. And that question is, how do you presently benchmark the environmental performance of your fleet? And what are your goals in that regard? How does your fleet today perform versus the measures that you consider important?
Good afternoon, everyone, and Hauke, thank you for the very interesting presentation. I think you have touched upon a few very interesting points that hopefully we can have a chance to discuss later on. As far as capital is concerned, and now I'm talking about the group capital sheet management effectively, we have been on the forefront of measuring and benchmarking our environmental performance now for more than 7 years. So there are two sides to this, right? First of all, to whom do you benchmark or against what is the benchmark that you're using? And secondly, what are your KPIs? We do multi-level benchmarking, so we look at our own vessels and the sister vessels when it comes to the first level. Then we look at peers to whom we have data to. And then, of course, we look at whatever industry benchmarks we have access. And then there is also the KPIs. The KPIs are, of course, greenhouse emissions, SOx, NOx, CO2, and the likes. But there is also other very important environmental performance KPIs, such as discharge of substances, such as oil spills or others, ballast water management violations, as well as other environmental deficiencies. So far, I'm very pleased to say that we have done extremely well, definitely on the discharges or the ballast water issues. So we haven't had any accidents now for more than a decade. But importantly also, when you look at our performance when it comes to greenhouse emissions, it has been improving. And that's not just against, let's say, the data, the 2008 or 2009 data that we have from the industry, but also even if you compare our performance against our 2015 benchmark, our internal benchmark, we have seen an internal reduction of all greenhouse emissions between 13 to 15%. So, and this is a result of two things. Primarily, it's because we keep modernizing our fleet. So nowadays, we have a modern fleet of less than 8 years of age, which comprises mostly eco ships, and that makes a huge difference. But also, we have been introducing vessel and fleet optimization tools that have definitely improved. There's, of course, a third, if you want, factor that depends more on the industry and less on us. That is also the average industry speed. That also helps. So we have seen in certain parts of the industry, be it in containers or tankers or dry bulk, depending on market conditions, a slowdown of the fleet, and as a result, also better greenhouse emissions numbers. You know, I think if you ask me what is the secret, first of all, you have to know your data, you have to be proactive. But so far, it has been mostly being on the forefront of introducing eco vessels and models.
Thank you, Jerry. George, let me give you a chance to address that same question.
Thank you very much, Hauke. Well, we all know how important shipping is for the global economy and for the global trade. We move 80% plus of all goods, and the industry is responsible for about 2.7% of global emissions. I think the important thing to have always in mind is that whatever the regulation has been through the years, shipping companies has always found the right way to comply with the regulations and be there when it was needed. Speaking specifically about the company and being a public company, we always had an environmental committee. And so the environmental committee issues like, the footprint and the emissions and the evolutions of fuels or optimization techniques has always been part of the overall discussion. In addition, we have the family has a foundation that also the Maria Tsakos Foundation, who also has sustainability as one of the key goals, and has committees that make recommendation not just for the public company, but also to the technical managers with regard to hot issues like the decarbonization of the industry. We have been, as a company, since the beginning, almost exclusively invested in new building vessels, and we cater to the needs of our clients, which means that we build vessels that meet the overall requirements of our clients, which are mainly the big oil companies, the commodity traders, and we do these things against medium to long-term charters. So all the new buildings that we have built in the last 5 years, they meet all the environmental regulations and the phase 1 requirements for new building vessels that were prevailing at the time. Of course, if you talk about new business today, the new requirements come into play, and not all the requirements are clear yet, because this is a discussion which is evolving. It's a work in progress. And of course, we are going to build vessels that will meet, the latest regulations and the needs of the clients. Now, the big question is what happens with, in addition, of course, we have a dedicated energy department that does what, an energy department should do. You monitor, report, and verify the emissions of your fleet, and you try, with the help of the committees that I have described before, to make sure that you are at the forefront of the developments. Now, what happens with vessels that you have in the fleet? Very correctly, you said that in a big fleet like ours, you have vessels that you have built for a different time. Ice class vessels or vessels that needed a higher speed, etc., etc. So these are the vessels that maybe today are closer to are getting aged, and the question is what you are going to do with these vessels that are over 15 years. Are you going to find ways to extend their useful life, or are you going to take a decision and you will gradually phase them out and replace them with more modern vessels? So these are discussions that we are having, and I think these are pleasant problems to have, especially if you operate a large and modern fleet like Jerry does.
Thank you, George. Let me ask a question specifically about LNG tankers. Both your companies have LNG ships, and there's been dramatic improvements in the energy efficiency of LNG propulsion over the years. We've gone now through several generations of very distinct designs for LNG propulsion. And my question is, what do you see as the likely service life of the tri-fuel ships, the diesel electric generation, in light of the technological and market developments that have come since then? And George, maybe if I can ask you to take that one first.
Thank you. We think the LNG, as you also mentioned in your presentation, has a future. And we have also seen that in the last 10, 15 years, developments in propulsion and in the LNG technology have changed dramatically from the first steam turbine vessels to the vessels that we have today. Provided that when we were building LNG vessels, the idea was that you could use these vessels for up to 40 years. I don't know if 40 years it's the horizon that we should have in mind today, but certainly based also on what you said in your presentation, that for the next 30 years plus, LNG vessels and this type of technologies should be there to service the requirements.
Good, thank you. Jerry, do you have a view on this also?
I do agree with George. I think that probably the case of TFTs, the kind of rule of thumb when it came to LNGs of useful life of 35, 40 years might not apply. But on the other hand, these are quite modern vessels. Don't forget that most of these ships were built between 2010 and 2015-16. Interestingly enough, though, they happen to be built at a time when new building prices for this type of ships were quite high. So when the average price of a ship like that is about 210 million compared, call it, to an XDF or a MEGI, which is closer to 180 to 190, at least in this last iteration. These vessels will be also handicapped from a financial point of view, because as you said earlier on, the earnings capacity of these vessels is definitely lower than those of two-stroke gas vessels, gas engine vessels. Currently, because of the low price of LNG, that delta, that differential is has narrowed. It's maybe 8,000 to 12,000 at this point. But once LNG prices go back to $7, $6-7 per MMBTU, that delta almost doubles. However, there is still an older technology, that will suffer even more before start to suffer, and those are, a steam ship. Today, its delta with an XDF or a MEGI might be 25,000. In a higher LNG price environment, that would be 50,000. So I think before we see TFT becoming obsolete, there is quite a high number of steam ships that will go. And in a way, TFTs, given their capacity, 160,000 cubics, but also their fuel consumption, they might become more kind of spot short haul workforces in the LNG industry. So the XDFs and the MEGIs will be there for the projects that will involve trips, ex-US Gulf trips to the Far East, but you might see TFTs being spot play, for example, in the Atlantic Basin. So to cut a long story short, I think there is a future. It will be difficult for owners to make money long term if they have actually built those vessels. It might as well be that we will see some of those vessels, like we see today, actually come back to the second-hand market and be picked up at a big discount. So the new owners might be able to utilize them and get a better benefit. But residual risk is going to be, especially as technologies and
I can't hear now.
Thank you, Jerry.
It's Hauke. Is
Let
Hauke
me
speaking now? It's Hauke speaking now.
I am. Let me turn back to both of you now with the retrofit topic, and Jerry, perhaps I'll let you start with this one. In looking at the older ships in your tanker fleet, Has your company considered or carried out any retrofits aimed at improving the propulsion efficiency of the older ships?
Let me give you a bit of background, maybe from our experience from the overall fleet. So also containers as well as other type of ships. I think you made a very good point when you demonstrated the consumption differential between an eco VLCC and an older technology ship. I would even argue that there are even higher differences in terms of the consumption. This could be anywhere between north of 20 tons in certain cases. But to a very large extent, as you know, those savings are the result of new ship lines, so new ship designs, derated engines, and energy-saving devices. So a combination of all this. Obviously, you cannot change the lines of a ship. We have done this up to a certain extent with containers, where we have done bow modifications, and these work. I think more so for containers, less so for tankers because of their design. But there are some things that you can do, but they're fairly expensive. And so still, I mean, a big container has almost more than double the consumption of a VLCC, and that's how also you can justify the cost. But as far as tankers are concerned, as applying energy-saving devices such as fins or other types of devices, they haven't proven themselves so far to be very to deliver the goods, because of the risk that you mentioned. There is a risk in when you install those devices, and there is also the performance risk. In certain cases, we have seen from our experience that vessels that we either have bought or built with such energy-saving devices, we have been asked later on by the shipyard or the class to actually remove those. So it's not a panacea, and not all of them work. So it is better when you apply all this on a new build, and you know that the whole thing, ship design, ship lines, propeller, as well as energy-saving devices work and perform. Recently on our LNGs, we are applying the ALS system, the air lubrication system, which is a new promising technology, and that has been shown to have fairly material energy savings. But to go back and modify existing vessels, even if they are large vessels with high consumption, it hasn't been proven yet to be a viable solution, I think mostly for the reasons that you mentioned. So going back to this, I think all these externalities, if you want, this increased greenhouse emissions from older ships, they have to be priced somewhat. And there has to be an incentive for owners to be able to apply those energy-saving retrofits in a way that they also get a decent return. We have seen repeatedly charters wanting to get the benefit of new ships, eco ships, or dual fuel ships, and they are willing to pay you for the energy saving, but not for the reduction in greenhouse emissions. And there is a value to that, right? So you have to put a price on that, so that also the owner can get a decent return on their investment, be it on a new build on dual fuel, be it on retrofits when it comes to energy saving devices. And that will also get the industry to where you described, whereby, for example, if you have many owners adopting this type of energy saving devices, then you will see more of a optimized kind of installation process. There will be less risk and so on and so forth. But what we're missing today is also the incentives in order for owners to look at those devices. There are, of course, a number of other things that you can do, and we have been doing, as I said earlier on, vessel performance optimization, specialized paints, lubrication optimization, and then also ballast water treatment systems, scrubbers. These all are environmental friendly installations. But I think in order to get to that next kind of step, be it dual fuel ships as far as new buildings are concerned or retrofits, we need to have a more of a framework when it comes to incentives. And this could go through many different ways.
Thank you, Jerry. George, can you give us your view on this question?
Yes, I agree entirely with Jerry in what was said. Okay, there are performance tools that we also employ. Some of the things were even before the introduction of these new environmental initiatives, that had to do with hull propeller cleaning in an optimized way, or coating, special coating in order to reduce consumption. We are aware that you can retrofit the different options that in theory save you on fuel consumption and also of course on emission, but we have not done any actual retrofit yet, because we are also not convinced that it will really pay back these investments. We prefer, when we focus in a new building, when we have a new building order, to see what we can add at the initial constructions that will take us over the next 10, 15 years, rather than do bits and parts here and there.
Unmuted.
Very good. Thank you both. Kevin, I have more questions for the panelists, but I wonder if we should allow some questions from the audience at this point.
Yep, thank you, Hauke. We have a couple of questions. The first one is finance. We didn't really mention finance during the discussion, but one of the questions is regarding investment, the type of finance used, and the investment options available, and ESG, and how all of that wraps together. I mean, are your financiers these days, when you're looking at new investments, actually sort of asking questions about propulsion, about emissions, about ESG, and all this kind of stuff? And is the finance to some degree determined by your responses to those questions, Jerry?
I think we're fortunate enough that our banks trust us, the ship owners, to make the right choices in terms of technology. I think that has been, this is our job really, to make sure that we get things right and our choices are future-proof. So no, we haven't seen much in terms of specific requirements from financiers. Of course, the Poseidon principles are now being adopted by an increasing number of financial institutions. I think it is a very good framework for the banks to be able to gauge their, let's say, the performance of the finance fleets. If anything, as I said earlier on, we have been doing this type of benchmarking now for years, and because of our modern fleet, it's obviously not an issue. I think it's a step in the right direction, but at the same time, it is important that owners, and especially large owners who have the know-how, like for example ourselves or TEN, where we have the know-how across many different segments, so crude and product tankers, containers, bulkers, LNG carriers, and we can apply the the specialization, for example, of the LNG side to dual fuel, that we know what we are doing, and we continue to be pioneers when it comes to environmental projects. I think the moment that we will see banks imposing specific technologies, then we might be getting the wrong turn. But in any case, we're not there.
Okay, thank you, George. Another angle on that same issue, perhaps. When you sit down with investors these days, how much of the discussion is, in actual fact, on decarbonisation, ESG, and the company plans for these things?
It's something that is starting to become an issue. In the last, since I think the start of the year, the shipping's footprint and whether shipping investments are ESG compliant, they take more focus. Investors have more focus, and they ask questions, and they ask us to tell them what we are doing, what are the plans, and how we intend to comply as the industry is moving forward in reducing carbon emission and towards the goal of zero carbon emissions in 2050. So it's become important. It's not the main focus yet. The main focus continues to be the performance of the company, where do you want the areas where you want to invest, the operational qualities that you have, but ESG questions are slowly coming in the forefront.
Okay, thank you. A question now for Hauke, perhaps. TEN and Capital are both large companies with large fleets. And the question is decarbonisation achievable in the same fashion for smaller companies? And what are the additional challenges for smaller companies with perhaps 4 or 6 or 8 vessels?
Thank you, Kevin. That's a good question. I imagine that the same obstacles exist for the smaller companies that Jerry and George have both mentioned. Questions about the performance of the retrofits, questions about risks associated with that actual performance, and then the financing to carry them out. And I think that my understanding is that to date, traditional bank financing is usually not available for these sorts of investments, that lenders expect ship owners, if they see an advantage to retrofitting, to finance those out of cash flow. We think that if we can get the costs of these retrofits reduced, if we can get the providers of the retrofit technologies to issue some form of performance guarantees, and if we can have the additional value of the vessels, of the assets, because of retrofits correctly reflected in the way the vessels are valued by lenders, that we should be able to overcome some of those obstacles and ideally put them into financial reach more easily for smaller shipholders as well. But I think that requires coming up to scale on this, having it be not a one-off project for a particular ship, but something that is routinely done for classes of ships.
Thank you. And we have one final question, which I think you can all chip into a little bit. I mean, for the last period of time and currently, there's not really been very much new building activity. And one of the main reasons for this is because there is little clarity about new fuels and new propulsions. The question is, when do you see that changing, and when might we see a new surge of new building activity? Jerry, if you might start, please.
As I think typically when it comes to shipping investments, it has been always very difficult to go ahead with one because there's the inherent volatility of shipping markets as well as asset markets. So it has been always a tough decision. As you say, now that you have the added ingredient of propulsion as to what is going to prevail into the future, what is the right technology today, that makes it even more complicated. And I think definitely the whole uncertainty around COVID and what this means about demand for transportation is also an ingredient that has effectively stalled the new building deliveries orders. However, in the end, it's also a question of prices. While the questions around propulsion revolve effectively around residual risk, if we increasingly you see more attractive new building prices, you will see also owners more willing to look at those investments as the residual risk is lowered because of the lower new building prices. So I think sooner or later we will start to see more activity. Already we have seen some orders being placed as effectively mostly Korean yards have been lowering their prices. But I think that is going to be mostly the answer. I do not expect to have visibility with regard to propulsion anytime soon. I think we will see many owners going different paths and effectively taking different bets with regard to propulsion. Potentially, all of them might work and might have just different implications for residual going forward.
George, sorry, do you agree, George, that an attractive price may tip the balance when you're considering what kind of vessel to buy, irrespective of propulsion debates?
An attractive price, if you can put it together with a contract, a specific business, then the answer, I think, is yes. Otherwise, you take risk and you wait to get some sort of guidance from the upcoming decisions that you expect the IMO to give some short-term measures and guidelines, and getting, let's say, get a clearance, getting clear on what the future has, even in small steps. I think this will be what we need, at least in our case, to move forward. In addition, let's not forget that we're coming out of this COVID, hopefully out of this COVID-19 severe depression in demand. We have recovered from the lows that we have seen in demand in April, but still we are not there yet at where we used to be at pre-COVID levels. So, and since we are in this energy transition phase, we might, another question is how many vessels we really want to move less cargo if we are not going to come anytime soon to the cargo demand levels that we have prior COVID. So it's a little bit environmental, it's a little bit sentiment, it's a little bit whether you are working on a specific project or not. Is wait and see, I think.
Exactly. And Hauke, just from the clients that you're working with at Marsoft, I mean, does Marsoft have a view on when we might see some clarity in terms of these propulsion debates and ship owners can make knowledgeable decisions about how to move?
I agree with Jerry that I do not expect to have clarity on the propulsion technology questions for several years yet. And while it's possible to delay investment decisions, I don't think that everyone will be able to wait until those questions have been fully resolved. I think that the combination of a return to a more normal global economic situation next year and the low prices that Jerry mentioned will lead to an upturn in ordering in 2021. I certainly expect that in the LNG space.
Okay, thank you very much. We're out of time, so I'd like to thank Hauke, George, and Jerry for joining us on this session. That is the last session of our Marine Money Virtual 2020 event. Thank you all for listening in. The sessions were all recorded and will be put onto our website in the next day or two, and you'll be able to listen to them again. Thank you very much to all of our sponsors for their support, and goodbye. Thank you.
Thank you.
Thank you.
Bye-bye.